Adil is a bilingual accredited mortgage professional committed to helping his clients across mortgage solutions, regardless of whether they're looking to buy their first, fifth home or refinancing their current home. He does that by listening to their needs first, building a plan, and specializes in discount interest rates, personalized service, flexible financing, and is with you every step of the way to ensure that your goals are met, in bolded. So he's going to be discussing some current market conditions, volatility in interest rates, what's happening with the banks, who's suffering from this, and how you can make sure you're on top of your financing needs. So Adil, I really appreciate you coming on, and we are putting you on the spotlight. So take it away, buddy. The mic is yours.
Awesome. Thank you very much, Mike. Everyone can hear me perfectly? Yeah?
Sounding great.
Perfect. So thank you again, Paul, for inviting me to this. And I just wanted to basically wish everyone well and try to keep safe and just keep that quarantine period in check, and hopefully we'll get through all of this. Mark, who preceded me, just talked about the real estate market. So I'm not going to spend too much time on it. I'll talk more about my industry, the mortgage industry, and how, in the last couple of weeks, we've seen a surge of applications. We're working from home, but we're still receiving, a lot of application daily, mainly refinances. Cash is king these days. So a lot of self-employed individual, a lot of people are putting in an application to get, some equity out from their property. I wanted to take a few minutes and talk and highlight what's going on into the market right now. We'll talk about the biggest thing, obviously, right now is the deferral program that most banks have in place. Just, remember that obviously it's not free money. It's just not even a loan forgiveness. It's essentially, a postponement. So if you really need it, I urge everyone that got laid off or self-employed to apply for this. There's a bit of a waiting period with most lenders. Some people are getting through in 10 minutes, some people 2-3 hours. I recommend, if not by phone, probably try to reach out by email. Keep the paper trail is very important. If you can record your phone conversation with the lenders, I'll recommend you do that. It's just that everybody's starting on the same line right now, but you want to protect yourself if your lender is very specific or has different term than any of the big 5 banks. But for the most part, the banks have been very helpful. Listen, we know that a bank is a business. It answers to their shareholders first. But however, they're showing a lot of flexibility during this time. And I believe that the deferral program for self-employed people like me or any of us here is a great benefit to have. So, I was talking to a client of mine yesterday where she got a 6-month deferral. And at the same time, we're taking advantage of those 6 months to pay as much credit card debt as we can for those 6 months, right? So you got to look at the opportunities that are available within the lines, and it's very important that you take a look and see what's available for you. On the lending side, right now, lately, it's been a little bit hectic for purchases. It's not clear how the banks or how the lender will calculate the income for a self-employed person. I mean, if you're already established and you already have a history, you should be fine. But in the near term, the banks are being very cautious. The underwriting is very, very heavy. So be prepared to be scrutinized a lot as a self-employed individual. We are going to have to answer a lot of questions. Make sure your paperwork, your documentation is in order. Talking to your accountant, making sure that everything is set up properly before a mortgage application will make it way easier once we get out of the slump and things start moving. And the most things I would say rates right now are all over the place. Right, yesterday you saw the Bank of Canada reducing the prime rate to a quarter. Does that necessarily mean that they're going to extend the discount to us? We don't know yet. It's going to happen in the next couple of weeks. What we've seen like a month and a half ago is fixed rates as low as 2.19, 2.29 percent. And right now, they all went up by 60 or 70 points. Those who have a variable rate last year are probably the biggest winner right now, because your discount was prime minus 1%, 1.2% last year, and now you're looking at, if the prime rate is going to go down to 2.6%, you're probably going to get a rate under 2%, which is a great rate. It's going to definitely be something to look forward to. But in terms of projection, I think in the long run, especially because, like Mark said, the Ottawa real estate market will rebound. My concern is the unemployment rate. Right now, they're projecting about 15%. So again, like Mark said, we're probably going to be looking at a V-shaped type of recovery. So it's going to be like a sharp decline followed by a sharp incline, and the rates will definitely be maybe going up in the short term, but in the long term, I see things stabilizing, and rate will go down after the whole COVID-19 situation, and we'll be able to go back to everything that we do on a special basis. So at the end of the day, my take on this is we're all going to be fine. It's just that I think if you're a self-employed person, you need to be aware that you have to look at your option, plan ahead, and just remember that we're all here for you. If anybody wants to discuss or talk their personal situation, I'm available. Even if you have your own mortgage broker or your own bank, it's just a second opinion, and I'll be more than happy to assist. Thank you.
Awesome, Adam.